Second, here what we see that the numbers we can say, I cannot quantify the numbers present. Because it may happen that one OEM may give us a business of 10 million euros and one OEM can give the business of 1 million euros. So numbers will be difficult, but yeah, we say we are very much on track and we are monitoring with our milestone how to achieve a 50-50 target for revenue, both from domestic as well as from the overseas market.
Sure, sir. I appreciate your points. I will get back into you. Thank you.
Sure.
Thank you. A request to all the participants, please restrict to 2 questions per participant and kindly join the queue for a follow-up question. The next question is from the line of Aditya Agarwal from Ambit Global. Please go ahead.
Hello. Hi. Thank you for the opportunity. So my first question is in terms of the capacity utilization. So last quarter, it was about 76%, I understand. So in Q4, what would that number be?
No, I can't get it. Capacity utilization. My capacity utilization for the whole year, if I work out, this is now coming to 74% because we have added, 2 machines during the year. So if I add the capacity available for these machines along with the utilization with the existing, my machine capability, it now works out 74%.
Okay, and probably the peak could be anywhere between, let's say, 80-85%, which you can take?
Yeah, 85% we can consider peak level of my utilization for commercial production. As we discussed and we are discussing earlier also, because 5% of the capacity I have to keep idle for my R&D purpose when we are calculating the capacity utilization available for us.
Got it. And my second query is in terms of the demand environment which you're seeing in end users, wheat, steel, cement, power, sugar. So how has been the demand shaped up in Q4, and any impact which you saw because of the elections as we are heading into it, or it's been kind of normal?
So far as the demand is concerned, now we are getting the demand from steel, cement is also coming up, and going forward, power will also play one of the growth driver for the revenues. So whatever that we got the order before the code of conduct for election is imposed. Before that, whatever the orders are there, that I think this is available to us. We are executable for us. The only thing the impact will be from the PSU sectors only. And sometimes what happens, the large turnkey project is being awarded to the main the project player like the L&T, Systemco, like that. And ultimately, the order is getting flowed to Elecon as what the business in which we are there also. So that also is, playing a key role for getting the business from the private sector also.
Understood. That's it from my end. Thank you and all the very best.
Thank you.
Thank you. Next question is from the line of Akash from Dalal & Broacha. Please go ahead.
Yeah, hello.
Hi.
Hello, am I audible?
Yes, Akash,
Yeah.
Please go ahead with your question.
Yeah, thanks for the opportunity, sir. A couple of questions from my end. First of all, this foreign OEM business wins that we have, and we just want to bring us approximately around 60 million euro kind of a revenue opportunity. That is already included in our order book, or how is it?
No, that is not included because we are signing off the OEM orders, but the execution will flow with the order inflows. So they will have the formal orders also, what they will require for year, for period on period basis also. So that is not included in that. But yeah, that will also going to come in the, from Q3 onwards, that will clear out.
Okay. So they'll become part of our order book Q3 onwards, and they'll become part of our revenue from Q4.
Yeah.
Am I getting it right?
Correct. That order may flow from there in Q2 sometime, and then we will start, doing delivering the commercial production from Q3 and Q4.
Okay, got it. And just one thing I actually missed out on the guidance. I actually lost network. So if you could come again there.
We have given the guidance of rupees 2,225 crore of revenue for FY24 with a sustainable margin of EBITDA margin of 24%. of which 364% we are expecting from MHE division and balance from gear division.
Okay, sir. Sir, why so conservative on the MHE segment? I mean, I think we were quite bullish on it early in the year, right? Because there's a lot of capex happening all around India, and that should actually benefit us, right?
Whatever the order will come, that also will start flowing to us in Q3, Q4, which may be executable in the next coming year, that is FY26.
Okay, so Q1 and Q2 will be flat, and it's so after post-elections we'll start to see a bump up in our revenues. Am I understanding it rightly?
Yeah, correctly. You have correctly understood that.
Okay, sir. Got it, sir. I'll join back.
Let me tell you one thing. We are trying to be conservative in our approach because we believe that because of the blackout period during the election, a lot of orders may be delayed. And that is the reason why we have taken a conservative approach. And that is the reason why this year we are expected to grow only at 15%. However, if the opportunity arises and the inflow of orders is better, naturally we will try our utmost to exceed this in a positive way.
Thank you. The next question is from the line of Praveen Motwani from BOI AXA Mutual Fund. Please go ahead.
Yeah. Hi, team. Thanks for the opportunity. Sir, first question is I want to understand, we reported 33% growth for Q4 24. So which sectors did really well for us? What was the growth rate in those sectors?
Mainly it came from the steel, cement, and also sugar was also there, part of that. And some are after sales services.
Okay. And sir, this growth, if you can just break up between the volume growth and the price growth, how do I see this?
And mainly it came from the volume growth this year. And because if you see the steel price has moderated compared to the last year in the current year. That is FY24. And MH, if you see in the MH itself, we had the good volume of business in this year with the good the margin for that. That is mainly from the cement and power sectors.
Cement and power sector contributed to MHCV. Okay, and so you're saying this 33% growth is the volume versus the price?
Yeah, mostly I think you can say mostly on the volume. The steel price got moderated.
Okay. And sir, when I see your order inflow number, I see that there is a...
Praveen, sorry, can you speak a little louder, please?
Yeah, I'm audible now?
Yeah.
So when I see the order inflow number, we have reported 10% growth in order inflow of the gear business. This seems to be a little lower number in terms of inflow. So how one should see in coming quarters, and what was the reason for this 10% growth in inflow in this Q4?
Q4 it will be there also. Because there is no protocol from the election will be there. So generally all the orders we are getting released in the month of March, most of them. In January, February, the flow will be lower. So that is also one of the reasons. And secondly, we see so far the revenue is concerned, we are on very much track what we are projecting. And further, there is my production cycle has also improved. So nowadays, if you see about my order intake vis-a-vis the revenue and open order, it will not have so much relevance compared to what it was in the earlier periods.
So you are saying because of the lower orders in Jan and Feb, the number looks lower, that is 10%.
Yeah, correct. So it is mainly generally all the orders are getting flowed mostly in the month of March. And because of this election period and election atmosphere, everyone is going slow on releasing the orders, waiting for what the outcome will be there. And number of apprehensions will be there from the industry side also.
Okay. And the last question is, sir, if you can just help me to understand how the competition intensity is right now versus what it was last year.
competition, Srinivas, would you like to pitch in? Hello?
The competition intensity has more or less remained constant. But however, because of the excellent performance of Elecon, the competitors are trying to look at how can they do better. Okay. So, they are trying to imitate our model going forward, and therefore they want to become more aggressive. But otherwise, in general, it has been reasonably constant.
Okay. Okay. Great, sir. Thank you and all the best.
Thank you.
Thank you. Next question is from the line of Sunil Kothari from Unique PMS. Please go ahead.
Thanks for opportunity, sir. Very commendable performance. Congratulations to you and your team, everyone. Sir, my question is, looking at, sir, MHE, the way order is increasing, the way power and mining and lot of sectors India is investing on, how prepared we are? Are we investing to
Mr. Kothari, we lost your audio.
See,
Yeah, you got my question, sir?
Yeah, how prepared we are.
Yes, sir.
See, first of all, let me tell you one thing that, because while we were executing projects, we had ample capacity to take much larger orders of size and magnitude. And therefore, the capacity-wise, we are today in material handling might be operating around approximately 40 to 50%. So there is a tremendous bandwidth that we have to further increase it if required. As long as products are concerned, our products are gaining more and more demand and traction as we see right now, because the order inflow is also high and the inquiry levels are also high. So we are reasonably bullish about it. However, since we don't have orders on hand beyond a certain limit, we have restricted ourselves right now at 360 for the FY25. But considering the fact that the demand is heating up, we may be able to exceed that to a good extent.
Right, sir. Sir, my second question is on this Russia and Europe, the relationships is deteriorating. Can it become a big opportunity or good opportunity for us to cater to Russian market?
Yes, I would put it this way that because of the relationship having deteriorated up till now, Russia also having a huge amount of surplus with India, a lot of Russian companies are looking forward to getting the gearboxes and drives imported from India. We are seeing that demand come up, in the past, and we believe with now the further sanctions will further improve the situation. So we are looking at this situation very, very positively and trying to prepare ourselves to grab this opportunity.
Great, sir. Thank you and wish you all the best.
Thank you.
Thank you. Next question is from the line of Harsh Mantri from Nuvama. Please go ahead.
Hello, am I audible?
Yes, sir, you are.
Yeah.
Yes.
Congratulations on the results, sir. So, on the guidance for FY25, you have mentioned that 360 crores is MHE and rest would be gears. Am I correct to assume that in gears only 250 crores is subsidiaries and the balance would be domestic?
Yeah. May I request you to repeat your
Would you like to?
May I request you to repeat your question, please? I can't hear properly.
1 minute. Sir.
Hello?
Hello.
May I request you to please repeat your questions?
Am I audible better now?
Yeah, you are.
Yeah. So, what I was trying to ask is that from the guidance for FY25, which is of 2,225 crores, 360 crores would be MHE and the balance is gear division.
Yeah, 1,865.
Yeah. So from the gear division, are we expecting only 250 crores from the subsidiaries?
No, 375 crores. Subsidiary plus business from overseas both put together.
Subsidiaries and overseas.
1 minute. Both put together would be 535 crores. Sorry, my bad. It's 535 crore from the overseas business as well as export from India.
So the line for the participant dropped. We'll move on to the next participant.
Yeah.
Next question is from the line of Nirav Vasa from ASK Investment Managers. Please go ahead.
Hello, sir, and thank you very much for the opportunity. My first question is, would it be possible for you to give the revenue, EBITDA, and PAT number for Benzler and Redicon for FY24?
Benzler and Redicon. Revenue, PAT, and EBT or EBITDA.
Revenue, EBITDA, and PAT for both your global subsidiaries.
May I forward this to you through our IR partner SGA by today or maybe early tomorrow morning?
Sure. I will get that data from them.
Sure.
The other question is pertaining to the bid pipeline, which according to you has slowed down because of this election activity. Would it be possible for you to quantify the amount of bids, either in numbers or in amount of crores, which according to you has slowed down and can pick up in second half of the financial year?
Yeah. That also, let me just, forward both your questions through email via IR, that is SGA, by tomorrow.
Right. The other question is pertaining to the overseas business. As Mr. Patel highlighted that in Europe they are facing tough times with regards to rising inflation, inability to get manpower. Are we seeing any inorganic acquisition opportunity there which can further strengthen our positioning with these clients?
Presently, we have no such plan for inorganic growth as we have sufficient capacity available. So far as the technology are concerned, we are self-sufficient in terms of the technology which is required to manufacture the gearbox. In fact, the Elecon, to in some extent, we are at least in a position to sell the technology also.
Right. My final question will be pertaining to
I would answer this question in a bit different way. We have our eyes and ears open. If there is any opportunity which would enhance the company's development and growth, we would definitely look at it. However, we have nothing on the horizon as of now.
That is really helpful. My final question, sir, is pertaining to the order inflows that you can get from thermal power segment. So, wanted to understand, in our opening remarks, we stated that our strategy is very clear on product supply and we will not be doing the complete EPC work. But if I look at this juncture right now, all the peers with whom you were competing in the last cycle are in bad financial shape and your balance sheet is one of the robust. So, if you are able to get good terms from the primary contractors, would you reconsider getting into EPC business or how is it?
Our strategy has been, rather than go for EPC contract, is to promote someone as an EPC contractor and supply equipments to them. And the reason is, it may look rosy right now with fat margins and things like that, but while execution, you have tremendous amount of issues that turn up. And if your parent company, who is giving you the order, lands into financial problems, then you are in a serious bad situation. And quite often it leads to litigations and all kinds of problems. We have seen that in the beginning of every economic cycle, it looks very attractive. However, while during execution, you realize that there is a recessionary trend. The money is dried up with the main contractor who gives the order to you, and therefore then you get into financial problems. So the best thing is to avoid that. However, what we try to do is we try to protect our terms and conditions and see to it that we supply our equipment and get out of it as soon as possible. So this is our strategy going forward. The best thing is to get an order and within 9 to 12 months, execute the job and get out of it as soon as possible before things start deteriorating. Hello.
Got it, sir. Thank you very much.
Thank you.
Thank you.
The next question is from the line of Khushbu Gandhi from Share India. Please go ahead.
Thank you, sir, for giving me the opportunity.
Khushbu, sorry to interrupt you. You're sounding distant. Can you please come a little closer? Khushbu, can you hear us?
Yeah.
Khushbu, your voice is breaking. We are losing your audio.
Hello.
Khushbu, still your voice is breaking. May I request you to come back in the question queue, please?
Okay.
Thank you. Next question is from the line of Kamlesh Jain from Lotus Asset Managers. Please go ahead.
Yeah. Thanks for the opportunity. So just one question on the part of, like, say, I'm not restricting myself to the FY25, but going forward, like, say, the way the capex theme is playing out in India, so, and all your industries are in significant investment phase, like cement, steel. So what, like, say, growth at a CAGR level do you see for next 4-5 years?
See, I would put it this way, that it all depends on how the economy shapes up over a period of time. Right now, everything is bullish, and it will continue to remain bullish for at least another, I would say, 2 years, okay, conservatively speaking. However, as soon as the recession comes in, at that time we want to see to it that our exports have taken sufficient traction so that the order inflow, which reduces from the domestic market, is compensated by the orders that we receive from the exports. So this is basically the game plan on which the company is trying to see to it that we are able to sustain our performance. Apart from that, we do not intend to do any capex from borrowings and to only do them from our internal resources, whereby it puts less of financial tension and pressure on the company, and see to it that our margins get sustained.
Okay, got it. And so lastly, out of our total revenue, how much would be like the replacement demand and on the OEM demand?
So if you see, presently in India, 29% of my revenue is from replacement market, which we call it as after sales service. In overseas presently, what I know, nearly 85-90% of the revenue is from the replacement market, which going forward will get reversed through the supply to the OEMs, with the process already started from last year.
Okay. Great, sir. Great. Thanks a lot, and wish you all the best, sir.
Thank you.
Thank you.
Next question is from the line of Garvit Goyal from Invest Analytics. Please go ahead.
Hello, am I audible?
Yes, sir. Now we can hear you.
Great. Thanks. Congratulations for the management team for posting such a great result. It proves that investor can continue to trust the effort that is being put by the management. So well done. I have couple of questions rather. Number one, when we have given a conservative guidance of say 15%, considering this elections slowdown and also the global tensions in picture, but at the back of the mind, do you have any specific sectors or specific areas which you think can spin a positive surprise for say next 18 months, which you think that could make a difference, if you can throw some light on that?
You are talking about a positive difference, am I right?
Yes.
Steel is one of the areas which has a tremendous potential, especially because of the fact that India is trying to become the second largest steel producer in the world. Okay, and this is going to happen very, very shortly. So there are very big investments coming up in steel. Okay, so that is one aspect. The other thing is that the capex cycle for cement is cyclical, and we see that there is, looking at the statistics, it seems that they will be further investing in the cement sector, which will also bring in reasonably good amount of orders for our company. So these are the two sectors where we believe there is a great potential.
Okay. And these two are actually domestic focused, isn't it? Whatever you spoke about.
Yes.
Okay. And while we all appreciate that we are also having a separate stringent focus on export for all the right reasons that you articulated before, right? But somewhere are we losing our market, or we are not focusing in growing our market share in India? I think that's the question that I have asked again multiple times before as well. So if you can throw some light that India as a market is being looked after everybody across the globe, isn't it? So that's where I have a feeling that we should not miss the bus. So if you can throw some light on that.
Absolutely. Now let me explain to you. Originally, if you have seen our presentation, maybe 2 or 3 years ago, we were at 36%. We had crept up to 39%, which means we are growing in the domestic market, but we are growing slowly. The other thing is, because of the high competition in the domestic market, in trying to capture a higher market share, normally leads to a price war, which will affect your margins. And therefore, the strategy is to go abroad and to go into markets where the margins are good, okay, and to also see to it that you are not dependent on only one market. But whatever that we may say, ultimately you have to understand that we are right now very dependent on the domestic market. And therefore, neglecting the domestic market is out of the question. Okay?
Right.
Because that is our primary market as of now. So we are not trying to aggressively go into the domestic market and capture a higher market share, because it would create a price war leading to depletion of the market. While on the other hand, we want to also make sure that the thrust is on the exports.
Okay.
So if I add further to this, we are a separate set of our business development team. In so far the domestic markets are concerned, we are very well established our business development team as well as our dealer and distributor network also. In the overseas market, we are now finding an opportunity, particularly for the OEM business, which will give the growth in terms of the volume as well as the